Welcome back. Let's, as promised, quickly look at Berger Paints numbers. The company did report a soft second quarter, and you could imagine that because we've had extended monsoons, heavy, flooding and rainfall in various parts of the country, and also, of course, competitive intensity. And that's the real question as we start off: is that competitive intensity coming down? Abhijit Roy, Managing Director and CEO at Berger Paints, is with us. Mr. Roy, great to have you in. Hopefully, you had a fantastic festive season. But before we talk about the numbers and the margins and the volumes, which are looking good, actually, you've done, I think, 8% volume growth. Let's talk about the changes in your industry. Now, because of the exit of the top executive at Birla Opus, suddenly the market's getting very excited. Today, Asian Paints shares are up, by the way, 4%. And I think the excitement is because the market is thinking, has this whole competitive pressure in the paint sector, has it finally come to an end? What would you say?
No, I don't think, it is coming to an end, but it is definitely reducing in the intensity that it had earlier, largely because, of the base effect, which is now going to kick in. So they had started from zero and, they were gaining value from the industry, and that was affecting the growth much more. Now, going forward, they already have a, pretty strong base. On that, the growth rate that they will generate and the value, therefore, that they will take away, from the industry will be much smaller. So the impact of that competition will reduce, in the third quarter and reduce further in the fourth quarter. But unless something dramatic happens, therefore, the growth rate of the industry will get normalized to a large extent.
But, sir, what makes you confident? Because the group still has deep pockets. I mean, sure, there is a management change that's happened and there'll be a new person taking charge. But it's a deep-pocketed group. So what makes you confident? I mean, are you expecting that... I think you've done 1% value growth, for instance. So are you expecting more price hikes ahead now in Q3, Q4? Just describe this reduction in competitive intensity. In what nature will it really show up?
Let me try and explain with some figures. For example, in the quarter 2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, quarter 1 also was like that. Quarter 4 of last year was also similar. Quarter 2 of this year also is similar. So it's around that 900 to 1050 type of
quarterly run rate,
which they have settled down, right? So now last year in the third quarter, their sale had gone up substantially, to possibly around 800 odd crores, and then in the fourth quarter it had gone up further to about 900 odd crores. So now when they are doing, say, 1000 crores, the net gain for them will be 200 crore, which is the impact on the industry. The earlier impact in quarter 1, for example, there was zero nearly, or 100 odd crores. And they did about, say, 950 or 1,000 crores in the quarter.
Got it. That's the sheer, I got your point, that's just the sheer quantum of business, which was going, suddenly from a zero base, suddenly 800 crores they took away, so it went away from the industry. So that's normalizing. What about...
was impacting the growth rate. But I'm not saying that their growth is, completely going away, or the CEO change is going to make, something substantially different. Business will carry on as usual. That will happen. But the tapering is also happening because, initially when they were coming in, they were adding a large number of dealers, from zero base, obviously, you will go somewhere, right? And you keep adding. They had done 2 years of homework and then they came in. And so they had a huge list.
That's what I'm coming to, sir. That's what I'm trying to understand, that when it comes to discounting to dealers, margins, dealer margins, which is where, any large incumbent, when they come in, that's where they disrupt. Has all that normalized? And what about pricing now from here?
So, the pricing is, more or less, I don't think they have been, grossly off that chart or something. It's not like, as people have been saying, this is geo moment and all that, but that is not happening. You take it away free, and then this is it's a small discount over the leader. Anyway, we compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
Okay, all right. I think we have spoken enough about the competition, and as you're saying, it's reducing, competitive intensity. So, Mr. Roy, let's get in a few numbers. By the end of this year, what kind of a growth can you give? First half of the year, you've done close to around 3% in terms of growth, with margins in that 14.5% to 15% vicinity. For the full year, what kind of a number are you looking at? Has demand perked up a little bit after the GST rationalization that we have seen? And what about margins? Let's talk about your business. For the next chat, we'll talk about how the competition is shaping up.
Sure. So in Q3, I think we believe that, we will be in the mid-single digit type of value growth. The volume growth will be near double digit or slightly ahead of double digit. As far as Q4 is concerned, we would be closer to the double digit mark or may cross the double digit as well in terms of value growth. So this is something which we are looking at. So if you have a 50-50, you can understand where we will be at the end of the year, which is somewhere around the mid-single digit, slightly ahead of that. So that's where the value growth will be. The volume growth will be double digit, I think, most probably. As far as the profit is concerned, there are three levers which are going to kick in, this quarter and going forward again in the next quarter. Typically, the second quarter is the lowest, for the industry in general. This time it was even worse because of the excessive rains that we had. So, the sales came down quite a lot, and as a scale effect, it brought down the EBITDA levels as well. That is going to change in the third quarter. Typically, the base itself is higher compared to the second quarter, and on that we expect some good growth. So therefore, it will have an impact as far as the scale effect is concerned. The second part is typically after the monsoon, the mix tends to improve considerably because in the monsoon period, the exterior emulsion sales goes down. So that's something which is going to improve in the quarter, that is the quarter 3. The third reason is that in the urban areas that we have been investing money. One of the reasons why, somewhat the EBITDA margin came down.
Okay.
Now that is basically, institution projects dependent, slightly in the urban areas, and that got stalled in the rain. It's going to revive in this quarter and the next quarter even more so, and therefore we should see positive result there as well. So all of these three combined, and the other benefit which we are getting now is that the raw material prices have come down a bit. So that should improve the margin a little bit.
Okay, Mr. Roy, always a pleasure hearing your thoughts. Competitive intensity is reducing. I think that's the big takeaway. And you're guiding for better times in the second half of the year. Wish you a good day ahead, a good quarter ahead, and we'll chat up soon. Thanks a lot for joining in.
Thank you.